Thank you, ladies and gentlemen, for keeping tuned at Smart 24. My name once again is Anthony Sebale, and I am your host for Financial Markets, where we talk money and capital markets that influence you and help you actually invest and save. Now, we are still talking to Mr. Owini Martin, a resource person from the Capital Markets Authority. The authority regulates, as you all know, the capital markets of Uganda, and they are concerned with all the things that you know about stock, everything you know about equities, bonds, and so on. They are the people in charge. Now, we were talking with Mr. Owini.
Yes.
About the stocks and equities. Moving on to the other thing that has been becoming popular with time, the collective investment schemes. Recently, when Mr. Matia Kasaija, the finance minister, was talking to media, he said that they have grown by over 17.4% in just 3 months. That is since December last year, with over a worth of 1.15 trillion from the 977 billion. Do you think has actually influenced this growth? And for starters, what are collective investment schemes?
Thank you, Anthony. Collective investment schemes are schemes where they collect investments, and hence the name collective investment schemes. I'll pick the easiest collective investment scheme. This is a collective investment scheme that collects investments in government securities. Now, government securities are divided into two. Number one, a government security is a loan to government. And many people would think you need hundreds of millions to lend to government. You only need 100,000 to lend to government. Now, if I want to lend to government, I can say, government, take my 100,000 for 12 months. If I do that, I am investing in a treasury bill. Okay? Then I can say, government, take my money for more than 12 months, 24 months, 36 months, 60 months. That is called a treasury bond. Are we together? So I can go for a treasury bill or a treasury bond. Every 2 weeks, there's an auction. And this auction is now telling me, if you wish to invest in this government securities, come and buy. Now, most Ugandans, if you told them there's a government security auction, they don't even know what the interest rate is. Which 2 weeks are we in? As the 2 weeks just started, is it just ending, or are we in the middle? And which day is the auction going to take place? Most people don't know. And because of that, Capital Markets Authority licenses fund managers. And fund managers stand up and say, guys, don't worry about the interest rates. Don't worry about which week we are in. We are the experts as we follow the interest rates, and we also follow the number of weeks. Just come to us. We have collected government securities and put them into a pool. Now, that pool, in essence, is an average. It averages out. Now, you'll find that treasury bills are between 8 to 9%. Treasury bonds are between 11 and 12% and 14%. So these fund managers say we have averaged out our investment pool, our collective investment pool. It is in the range of 10 to 11%. If you wish to buy these treasury bills, whether you're buying for 3 months or 6 months or 12 months, just buy our pool. Don't even worry whether you have to go in for 24 months, 36 months, or 60 months, because the rate can change. For us, we are tracking the rate. We have collected these government securities and put them into a pool. In this pool, we have divided the pool into units. If you want a unit, come and buy our pool of investments, okay? And we will not give you the full pool, we'll just give you a unit, which costs 100,000. So if you have 100,000, take 1 unit. If you have 1 million, take 10 units. If you have 100 million, take 100 units. You get the idea, or 1,000 units. So what happens is they are now saying, come to our pool. Now, that's essentially a collective investment scheme pool of government securities. It can be of shares, it can be of property, it can be of government securities.
Can it be a mix as well?
It can be a mix. Now, when we talk about government securities, what you are in essence asking is, why are they so popular? They are popular because if I had 100 million and you had 10 million and we went to the bank, who gets the higher rate if we are asking for a fixed deposit? It's me with 100 million. You get the idea? I get more than you. But in a collective investment scheme pool, we get equal. Everybody gets the same, 10 to 11%. Number two, when I put my money there, you may be saying, I'm putting this 10 million here for 2 months. I may be saying, I'm putting my 100 million away for 6 months. You get the idea? In the middle of the 6 months, if I went and say, give me back my fixed deposit, most likely the bank is going to tell me, forfeit your interest, take your money. You've wasted our time. We thought you were going to stay for 6 months, you've only stayed for 6 weeks. Go with your money. In a collective investment scheme pool, I am not bound. Anytime I want all or part of my money, I will pick it. Now that's the other advantage. Then the one that is currently being debated is the whole issue of, should I be taxed or should I not be taxed? Currently, what we know is collective investment schemes, according to Income Tax Act, are not taxed. Yeah. So because of that, many people are wondering, where did this product come from? But that's the background. The background is, number one, it's an opportunity to invest in safe securities, government securities, without the hassle of, I must stay in for this amount of time. I can only come out at this time. No, I can be as free as I want. Two, whether you have 10 million or I have 100 million or our friend has 1 million, doesn't matter. Everybody gets the same rate. Yeah.
Now, you see that you've talked about fund managers. Who is a fund manager? And in this case, how do I avoid getting scammed with my money? Because there are people who came with some Ponzi schemes like cryptocurrency, so many other things that people say, you come, we bring your money, and they have the same idea.
Yes.
We keep your money, we invest it for you,
yeah.
You come back with, we give you returns.
Yes.
But some people have been cheated. Now, who is a fund manager and who is the right fund manager? How do I know?
How do you know? Yes. Okay, that's a very good one. Number one, most people who watch TV are tech savvy, so they'll just need to switch on their phone and check the list of people who are licensed by Capital Markets Authority. Number two, when you enter an office, look for the license. Many people, yes, it should be somewhere. Many people actually, when they enter a commercial bank, subconsciously look at the license, but they forget that they've seen it. When you enter an office of anybody who says that they're dealing in collective investment schemes or unit trusts, ask for their license, their Capital Markets Authority license. If they don't have it, walk out of that office. Yeah. So number one, they should have a license. Number two, they should appear on the website of Capital Markets Authority. Yeah.
Okay, now there is an issue of brokers, and we mentioned it in the first segment, but there are people who call themselves brokers or so-called brokers, and they say, you know what, if you want to buy shares in MTN, like you said, we will help you. Now, those ones, which category or which kind of people are they, and in what ways should I expect them to help me, and how far can they help me? Or I can just say, me as Anthony, I want to buy MTN, I just go direct and buy by myself. Is it a must for me to go to a broker, to go to someone, or actually I can go direct?
Very good question. If I want to deal in the capital markets, number one, whichever player I'm using must be licensed by Capital Markets Authority. Even the one selling the shares needs a license from Capital Markets Authority. So what actually happens is, when you talk of a stock broker, that stock broker is the go-between. If you wish to purchase shares, it's like if I wanted to buy treasury bills or treasury bonds, and I went to Bank of Uganda and I said I have come to buy it, they'll tell me, sorry, we don't deal with the public directly, we deal with the public through
Commercial banks.
commercial banks. Go to your commercial bank. So if I go to capital markets and say, I listen to a TV program, I have come to buy shares, they'll tell me, sorry, go to your stock broker. You get the idea, and there's a whole list of them. Stanbic Bank is a stockbroker. Bank of Baroda is a stockbroker. UAP Financial Services is a stockbroker. Britam Asset Managers are stockbrokers. Go to those, and they will bring you to the stock exchange to buy shares. Two, I may be saying I have a lot of money, or I'm interested in a collective investment scheme now, and I want to. I understand this whole thing of buying and selling of treasury bills. I want to start a company. No, that company needs to be a fund manager licensed by Capital Markets Authority, and there are minimum requirements that I should be able to fulfill to become that fund manager, to manage this buying and selling of unit trusts, a unit of a collective investment scheme. If you trust me, buy my unit. Yes.
Now, still, the people out there might be wondering who can invest. I might be an institution, I might be an individual. Who can go ahead and invest, and to what extent? Like I said, many people out there are so scared of losing money. They feel they're insecure, with their funds. I feel like putting money in this company, we are not so sure.
Yes.
So who can invest, and how can they feel? Do they have to feel any fear concerning their money being lost, or so long as the company is licensed, everything is good?
Okay, number one, who can invest? Anybody. All I need is my national ID and a few passport photos. I can walk to any stockbroker or collective investment scheme and say, please, I've come to invest, I have 100,000. Minimum, that's all you need to transact. For shares, even with as little as 20,000, you can actually transact a share. But let's use the number of 100,000. Now, what am I looking for here? I walk in and I say, I have come to do what? Participate in unit trusts or collective investment schemes. Here is my national ID. Here are my passport photos. I fill out a form. It's called Know Your Customer form. And then the company will tell me, if you want to invest in a share or a collective investment scheme, send the money to our account in X bank. Whether you put it there by cash, electronic transfer, mobile money transfer, the money moves.
So there's nothing like giving the fund manager money. It's always
through an account. Yes. So you send the money to the account, then they invest it in the asset that they have told you, or the asset that you have agreed with them. Now, two, that's if you're an individual. So two, if I am a school, I am a hospital, I am a SACCO, I'm an investment club, all I need to do is, what's my legal entity? Where's my certificate of incorporation? Of my directors approved and signed? I go ahead and I invest. Then, is it risky? Yes, it's risky. Why? Share prices go up and share prices go down. Then also, when I'm investing in a collective investment scheme, so that means that if I'm buying a share, I must be absolutely confident in the company. And that's why we use examples like Stanbic and MTN. If I'm absolutely confident in Stanbic and MTN, buy Stanbic or MTN. If I'm not, I don't buy. You get the idea? Now, if also I am buying collective investment schemes, there are three categories of collective investment schemes. Number one, those that are dealing strictly in treasury bills, not bonds. Those are called money market. So treasury bills, that's lending to government for 12 months and below, and also fixed deposit accounts. Those are money market unit trusts. Number two, the balanced unit trust. No, sorry, the umbrella unit trust, the one that brings in treasury bills, treasury bonds. Now that's the most popular. Actually, the most popular the most popular umbrella unit trust comes out of UAP Financial Services. Currently, it's valued at 750 billion. So, over 20,000 Ugandans are participating in that particular unit trust. Over 750 billion. Why? It mixes treasury bills with treasury bonds, giving you a return of 10 to 11%. And people feel stable there, that's why they put their money there. Then the one that brings in shares is the one that you're really going to see the interest rate changing, because share prices are not guaranteed. They go up and they go exactly. Now that's called the balanced one. It mixes treasury bills with shares. Yeah.
Now the long term and short term, you say unit trust, you can pull out your money every time. You can pull out.
Yes.
You say you can, before the period is done, you can pull out your money.
Yes.
Now, if at all I have decided to invest in equities, how long should I wait? You say you're giving a period of, for example, 5 years.
Yeah.
How long should I wait to pull out my money from the collective investment scheme in particular? If at all I ventured into equities as my investment.
Okay, if you ventured into equities, you need to realize that when you're ready to pull out your money, it could have eaten into your principal. And that's why people like the umbrella fund unit trust, because it doesn't eat into your principal. Yeah. Now, that means that if you're investing in equities, you are a long-term investor. Whether you're buying shares or you're buying the balanced unit trust, which mixes equities with treasury bonds. What does that mean? That means that I will stay in until the price begins to rise. But I don't need my money immediately. I don't need it for medical. I don't need to pay national water, Yaka. This is residue income. I'm just leaving it there. I can pick it in 15 to 20 years. If it works out before 5 years, well and good. If it doesn't, I'm not in a hurry. I'll wait. That's the trick with buying shares or participating in a unit trust that buys shares. Don't put money you need there today or tomorrow. Don't touch that. You'd rather give it time to rise in value. Yeah.
Now, would you rather advise, because now we are saying we're putting money aside, money we don't need for today. So are you saying actually people, instead of storing money, keeping money in the banks, they could actually get this money and put it in a collective investment schemes, or it would be better to keep this money in the bank?
What I would say is that's an interesting question. And let's be fair to the banks. Go into the bank and say, look, do you have a product, a fixed deposit account that can rival 10 to 15%? Sorry, 10 to 11%. Likelihood, unless you have a lot of money, it's not going to work. And that's why collective investment schemes have become so popular. Whether I have a 1 million, whether I have a 13 million, whether I have a 300 million, we're all treated equally. Yeah. And that's why the minister is saying they are seeing exponential growth of collective investment schemes, because they give an equal interest rate and the underlying product of government securities is a safe product. Yeah. So what I would say therefore is, after checking with the bank, check with your collective investment scheme manager, licensed by Capital Markets Authority. If you're getting a better rate here, then go here. Now, the other thing that comes out with the collective investment scheme is they pay interest daily. The bank pays you. Now, that's another attraction. If when I'm ready, I may want to get back my money after 14 days, but I want an interest on it. I'll go not to the bank, but to the collective investment scheme.
Yes, now well and good. Now the companies have been listed, we have invested in them. Let's say, God forbid, a company closes. Of course, it has gone through all those stringent measures and stuff. Is there backup for the shareholder as an entity? Because as we know the law, the bank or any institution that is closing and maybe running bankrupt, it will first pay its creditors, then pay its employers, then pay all the other people that are entitled, and shareholders are always put last. Now, what is the confidence you can give to a shareholder that in case things go wrong, I still can get my money, which I put in that, in terms of shares?
Okay, the issue with shares, and I must, because this is educational, I must emphasize, share prices are not guaranteed. They can go up or they can go down. Collective investment schemes, if you're going into the umbrella scheme, that's a more certain return. And that's why I say that when you're looking to invest, are you going to go for the certain or uncertain? Now, people who go for the uncertain say, I've left it for a long time, I don't need it immediately. This is residue income. Keep it there for 10, 15 years. I'll come for it when I am ready. Their assumption is that over 10, 15 years, it would have outcompeted this one that is giving me a certain return. The umbrella scheme fund. Yeah. So at the end of the day, what's my position? I'm then going to say, which one do I prefer? The certain or the uncertain? You get the idea. Now, if I'm going for the uncertain, I'm giving it time. If I'm going for the certain, then I want my money with principal protected. Yeah.
Okay. Now, as we draw to the close of the program, we would like to now look at the saving culture of Ugandans and investment culture. We've been already ranked lowest in East Africa, with only saving about 12% or 11% per GDP. So our savings to GDP ratio is very low. Ugandans are missing out on saving and investment because they have not yet realized this investment platform in the capital markets, or there are actually other factors that are hindering Ugandans from saving and investing?
I think it's a combination of the two. And what I would say is, number one, savings are driven by forced savings. In other words, people must be forced to save. So when you look at the other countries, one thing that they have done is their NSSF, our NSSF was restricted to if you have 5 employees or more. So if I had 2 or 3, I could get away without saving. But the new NSSF Act brings you into the bracket. So now you're likely, you're now likely to see more savings, more members taking part in forced savings. Now, at the end of the day, that's what drives an economy. Now, what are we trying to say? Also, in addition to that, you can't only be saving with the NSSF. There's the mandatory, let it go to NSSF. But these other countries have also cracked the scheme of the guys who are voluntary savers. You get the idea. Smart TV can have a retirement scheme. You get the idea. Nakumat can have a retirement scheme. Any Duka downstairs can have a retirement benefit scheme. That's when savings will now begin to go up. Yeah. So crucial in terms of changing the culture of Ugandans is allow Ugandans to save out of the NSSF and also voluntarily. Then you shall see savings beginning to go up. Needless to say, unit trusts are also a sign that Ugandans can actually save. And you'll be surprised that the Ugandans who have driven these unit trusts to 1.15 trillion are actually less than 30,000 Ugandans. Now imagine if 300,000 Ugandans were saving, 3 million Ugandans were saving. That would go up. The other thing that we've got to take cognizance of, people save in different ways. Some will save through land, some will save through the capital market, some will save through property, but at the end of the day, don't keep all your eggs in one basket.
Lastly, there is a thing about companies that want to get listed. Maybe there's a Ugandan out there saying, oh, this is, I think, a good opportunity, and I would like my company one time to be listed and raise capital. And probably these are not as big as, for example, MTN or Stanbic. As the Capital Markets Authority, do you have anything for those small and medium enterprises that also want to raise capital, but maybe their margins are not as big as the ones of MTN and the like?
Yeah, no, what I would say there is the important thing to do is Capital Markets Authority is available to support that process. And they have education initiatives such as this one. They have education initiatives where we're even able to come to your company and or come and talk to you as an individual. And if you permit, I can even give my number in that regard so that people can call me on 077-2216-290 or 0757-216-290, 077-2216-290 or 0757-216-290. Now, what's the purpose of that call? In order to ensure that we are able to assist you, should you say, I want my company to float shares to the Ugandan public, we can help you get the license. 2, Should you be saying, I want to participate in a collective investment scheme, I need some guidance, call the line. We'll get you support just to ensure that you can actually do it. If you don't call, WhatsApp,
Yes.
and you'll be able to go through.
Wow,
Yeah.
there you have it, fellow Ugandans. That was Mr. Owini Martin. We were talking about the capital markets and the Capital Markets Authority, who is the regulator of all the capital markets in Uganda. That is the licensed companies, the ones that are listed on the stock exchange, and all these other collective investment schemes. They are regulated by the Capital Markets Authority. We have talked at length about how you can get started, about how anyone can actually get involved in this. And we shall not stop preaching this to you until it actually sinks in and you get actually moved and start investing. Mr. Winnie, as we go off, we would like to get your parting shots out there to Ugandans, a word of encouragement or two concerning capital markets.
What I would like to say to Ugandans is, number one, whenever you talk of capital markets, most Ugandans are going to say, I don't have that kind of money. The money is too much, it's in millions and that kind of thing. But only with 100,000, you can participate in a collective investment schemes or buying and selling of shares. Just 100K. Thank you very much. Those are my parting shots.
You're welcome. Thank you very much, Mr. Winnie, and we would like to have you back sometime maybe as well, because you're very resourceful, and we could continue educating each other and the fellow Ugandans on this quite very fascinating field. My name is Anthony Sebal. I've been your host for Financial Markets. Have a very, very wonderful rest of the day. See you around. Thank you.